Hello, traders. Thanks for joining us today on this panel discussion and interview with the creators, some of the creators of the Small Exchange. Thanks for joining us. The plan for today is to have Michael Goff, Pete Malmet, and Natalie Oblazny on with us. Michael Goff is going to present information about what the Small Exchange is, details on the products, membership, and so on. And then we'll dig into some questions. If you have a question, please take a moment to type it in. We'll prioritize the questions here with some help, and we will spend the last 20 to 25 minutes addressing your questions directly. I want to remind everyone that trading futures has substantial risk of loss. It is not suitable for all investors. Past performance is not necessarily indicative of future results. I also want to remind you that the Small Exchange is a registered trademark and a CFTC member, and they are responsible for their own opinions. They don't necessarily speak for EdgeClear, and we don't necessarily speak for the Small Exchange. Before we launch off here and have the Small Exchange team come on, we wanted to let everyone know about a special deal that EdgeClear is making. As you already know, we already offer a 98-cent per round turn all-in fees, including Rhythmic, for various products, existing products at EdgeClear, and we're extending that same pricing. This is very low pricing. This includes all of the exchange fees, clearing, commissions, NFA, plus Rhythmic, which is a high-end, definitely my favorite trading platform. But we're also sweetening the deal by offering you back 10 cents per side rebate between now and July 15th. The sooner you sign up, the sooner you can participate in this rebate, essentially making your round trip cost for trading on the Small Exchange 79 cents per round turn, again, including all fees, including Rhythmic. Rhythmic is subject to minimum usage fees, minimum monthly fees, in addition to what you see here. But if you want to take advantage of this, please let us know. Reach out to edgeclear.com. Let us know that you are in this event and you want to participate in this rebate program. We're running it through July 15th. It starts immediately. The sooner you sign up, the better. And this is exclusive to Small Exchange products, which are going to be discussed here by Michael Goff. So without further ado, I'll bring Michael Goff on, as well as the rest of the team. Michael, can you hear us really well?
Hello, traders. Yes, I can hear you.
Hi, Michael. I'm going to pass the presenter control to you, and you just need to select the screen and show us what you've got today.
Great.
Sweet.
Can everybody see this screen? Morad, can you see this?
Yes, we see a PowerPoint in editor mode.
Okay, let me see if I can get this in presentation mode here for you.
There you go.
All right. First off, I just want to thank you all, Morad and Max and the whole EdgeClear team, and each of you for attending today. My name is Michael Goff. I work with the Small Exchange. It's a brand new futures exchange. I'm going to give you a little overview of who we are and what we stand for, our values and our product offering, and then I'll bring on two of my colleagues to answer some questions that you may have and go a little deeper into our offering. So what is the Small Exchange? So we are a new CFTC regulated futures exchange with the goal of making futures markets more accessible to more people. When I started trading as a kind of a stock trader, dabbling around in markets in high school, and eventually moving on to trade options, and I was always interested in trading futures, but was kind of dissuaded by their size and their complexity, but also drawn in to their allure for a number of reasons, which I'll outline here in the next few slides. Futures contracts offer some very enticing benefits over stocks and ETFs, but they have these steep barriers to entry. And I just want to go through some of the pros and cons here. So futures products, first off, are generally more economical than stocks and ETFs. However, they tend to be much more unwieldy. And what I mean by that is the capital required to trade futures products. You tend to put up significantly less capital to gain exposure to futures than you would with stocks or ETFs. In the stock and ETF world, you're generally required to put up 100 or 50% of the capital required to trade, whereas futures margining basis the span methodology is much more efficient at around 1 to 5%. However, traditional futures, which were largely intended for institutional investors, are also much larger in size than stocks and ETFs, and a lot of times they force you outside of your comfort zone, taking on too much exposure. In addition to the capital efficiency that futures provide, they also tend to be much more accurate than stocks and ETFs. And this is one of the reasons I wanted to trade futures as a young trader. I wanted direct exposure to a certain index or commodity, and futures provide that. That is the nature of the futures contract. Whereas if you want exposure to gold, one of the most direct ways is with a future. If you trade gold stocks or ETFs, you often become entangled with corporate structure and price to earnings ratios and some other aspects that further remove you from pure gold exposure. However, the drawback of that exposure is some contract complexity. Whereas in the stock world, 1 cent is always 1 cent and a dollar is a dollar. Futures tend to vary in their tick size and their expiration and just the notional value as you traverse across different markets like energies and foreign exchange and stock indexes, etc. And the final great benefit of futures products is that they're much more dynamic than stocks and ETFs, but with that comes a bit of confusing, complex contract jargon that takes a bit of adjusting to get used to. Futures allow you to trade a variety of markets that are largely inaccessible with stocks, things like energy and interest rates and foreign exchange and precious metals, whereas in the stock realm, you're largely constrained by publicly traded companies or ETFs that consist of publicly traded companies, in some perverse cases, ETFs constructed of futures contracts. So let's say you want to trade foreign exchange, for example. You decided on an asset class within the futures realm. Once you step into the Forex market, you're then confronted with an additional choice, which currency pair to trade. This can be kind of a deterrent to entering the market because you just want US dollar exposure, and now you have to decide which region of the world that risk you want to take on. And stocks have the benefit of being so standard in their construction across the industry. So what we're trying to do here with the small exchange, and it's been our mission for over a decade now, is pair the efficiency of futures contracts with the ease of stocks so that our products can resonate with a much wider audience, people who have traded futures before or never traded futures for that fact. And I just want to be clear that these are futures contracts. So how do we accomplish that goal? The small exchange is creating products that are smaller in size, as our name states. We want to provide products that afford you an efficient use of capital that can be tailored to any account size. We've created products that are standard in their construction, so you spend less time studying contract specifications and more time engaging in the market. And finally, we created products that are simple. We're providing clear context so you know what you're trading and it's relevant so you can bring your ideas to execution. So small, standard, and simple is the credo of the small exchange. Let's start with small. Efficient capital that can be tailored to any account size. Futures contracts, like I mentioned in the beginning, have a very efficient margining system. It's called span margining, which enables you to gain a certain amount of exposure for significantly less capital than you would otherwise require with stocks or ETFs. But even with that efficient margining, futures contracts are so large in size. These aren't your favorite stocks or ETFs. They're often $50,000 to $200,000 in notional value. So even with that efficient margining, a quick calculation shows you're going to need to put up significant capital to trade, which can subject you to greater P&L swings during the day. Small exchange products are actually scaled down. They're palatable in size, so you benefit from the efficient margining at a much lower cost. Let's take a look here at the traditional equity index future and the small exchange stock 75, which is our equity index product. Now the black line is the traditional future, the red line is the small stock 75, which in this graphic looks like a bad case at the ER. But if we zoom in here and adjust the y-axis, we can see that the smaller product provides very similar exposure to traditional equity futures at a much smaller bite. Instead of experiencing price swings of thousands of dollars a day, we pare this down to a few $100s without sacrificing on diversification and exposure. We compare here the small stock 75's average daily move to an ES future, and you can see that you're getting similar exposure. It's about a 0.9 correlation, but at a much smaller size. And this virtue extends to all small exchange products. We look at our precious metals index, which is moving about $85 a day versus the gold, silver, and platinum futures that exist currently, swinging upwards of $2,400 on an intraday basis. This holds true in our foreign exchange product, which moves about a tenth the size of traditional currency futures without the additional contract complexity, and our soon to be trading small global oil product, which is moving significantly less than outright crude. I remember being in New York for a Traders Expo in March when crude oil opened down $20. That's just an unbelievable amount for a retail trader to be in a position in that circumstance. With a smaller product, you benefit from the exposure of oil with much less bite. And finally, our sleek interest rate product, which is actually quoted in yield, moving at just a fraction of what interest rate bonds and notes and fives and twos move on a daily basis. So smaller products.
Michael, I'm sorry, 1 second. Just, I want to remind everyone in the audience that the performance metrics shown here, you need to be aware that past performance is not necessarily indicative of future results. As registered brokers, we have to make sure you know that. That correlation and the volatility and so on may change over time. What Michael's presenting here is performance based on probably, I'm guessing current. I'm not sure how you computed that, but I just want to make everybody know that this can change. Those correlations can change over time. That's all.
That's correct. And thank you for the clarification there, Morad. But in conclusion here, in the smallest piece, by scaling down the size of the products, we're trying to create something that's a little more palatable. So reducing the size of the futures contract and not your trading opportunity. Now, secondly, I want to speak to the standardization of all small exchange products. All smalls have a universal construction that tracks directly what you want to trade and gain exposure to and what's kind of relevant in the news every day. And what exactly do I mean by that? Well, with futures contracts, you're able to obtain some of the purest exposure to indexes and commodities, and we'll use gold as an example here. The futures contracts that track gold do so accordingly, and they do a great job at doing it. If you're uncomfortable trading the future, you may look to the stock or ETF, but you often have to sacrifice some of that pure play exposure by investing in companies involved in mining and manufacturing, and they really don't have that direct movement to gold that we'd see with the futures. I mean, if you look at GDX or an XME or a Newmont Mining or a Freeport McMillan, you're really exposing yourself to a CEO and a board of directors and a fundamental analysis that you may not be looking for when you want to trade gold. And futures do an excellent job at tracking commodities in that way. And with our small precious metals product, you might be surprised to see how different performance can be in the actual commodity versus some of these related companies, which you may think you're getting exposure to gold, where in reality, the performances can vary as widely as 20% in some instances. If we look at our small precious metals product on the small exchange, in the red line here, we can see that it tracks almost directly to the price of the actual underlying spot metals. So you get exposure to what you're expecting to get exposure to. The drawback of traditional futures in this sense is that while you can get exposure to a number of markets like stocks and currencies, bonds, energies, and metals, to traverse across these markets requires contract studying and sometimes even a compass or a map, it feels. Even within some segments, for example, gold and silver futures tick in varying amounts. They have unique expiration dates, etc. All small exchange futures, whether you're trading precious metals or a stock index or an interest rate product, they all have the same uniform contract specifications. So you spend less time referencing specs. And kind of a powerful example here is just computing your profit and loss in some of these traditional futures. Each contract has a bespoke tick size, a bespoke multiplier, a unique expiration date, and computing your P&L sometimes can seem like a brain teaser or a puzzle, especially when you look at things like foreign exchange, which often can tick in half of a 10,000th. Just looking at the number of decimals on the screen is a deterrent to trading in some instances. When you compare that to all of the small exchange products across the board, everything moves in a 1 cent increment with a $100 multiplier. So one tick, 1 penny is $1 when you're trading the smalls. Finally, we look at an expiration calendar of some of these existing futures contracts. Seems like there are more dates in the month than birthdays in the corporate office. You have corn, soybeans, and wheat expiring on Friday, and energies, whether it's crude oil or natural gas on a different day. And then the currency futures, which are within the same market, having different expiration dates. We've removed that barrier to entry by having all small contracts expire on the third Friday of the month. So again, across all 5 markets, we have a uniform expiration date. And for those of you who trade options on top of futures, you may find this a nice convenience as it's just the monthly expiration date for your existing option positions in most cases. So with a standard construction, we're trying to allow you to spend less time studying and more time actually trading the market that you came into the marketplace to trade. Now, finally, all small exchange products are simple in their construction and in their implementation. We've tried to lay out a clear context that can accelerate your trade ideas to execution. Now, what do I mean by that exactly? Well, with futures contracts, you can get exposure to these variety of markets, which I previously alluded to. Whereas with stocks, you're really confined to equity products, right? It's really difficult to gain direct exposure to oil or to gold with stock products or even ETFs in some instances. But let's say you decide you want to trade foreign exchange or you want to trade the US dollar, which is in the Wall Street Journal every single day. In the Financial Times, we're seeing a lot of interesting movements in the dollar just because of unprecedented interest rate activity, et cetera, whatever the reasons may be. But if you enter the foreign exchange market complex on traditional futures exchanges, you're going to come into contact with almost too many choices. Do you want to trade yen versus US dollar? Do you want to trade Canadian dollar, Mexican peso? It feels like you have to learn Japanese and familiarize yourself with Bank of Japan announcements and inflation reports and unemployment numbers just to gain exposure to the US dollar. And this is great for institutional hedgers who need that exact exposure, but it's often too complex for traders like you and me who just want US dollar exposure. The small exchange products, all 5 of them are clear in their context, and I'll outline each of them here, and we'll be happy to discuss further in the Q&A period of this webinar. So first, the small dollar product. It's going to connect you directly to the US dollar, and it's not doing so in a single currency pair conversion. It's actually weighted against 7 major currency pairs, the largest economies globally. So you don't need conversions when you're trading foreign exchange. If you think the dollar will go up, you buy the product. If you think it will fall, you can sell the product. And because of the weighting methodology, it's a much more representative indicator of the US dollar holistically. And one of the really cool values of this product is the currencies within the basket. We have the Chinese renminbi here, which is so difficult to gain exposure to these days, but so relevant in our daily lives as the world's second largest economy. We have a small stock 75, which is our take on the equities markets. It finds the most dynamic stocks from the 5 major sectors, and it actually adjusts on a yearly basis with shifts in the equity environment. So you always stay trading an active stock market. We rebalance annually based on factors like market capitalization, volume traded, and volatility. So you know you're getting 75 names, liquid names, and highly traded equities that you're reading about and hearing about in the news every single day. We have a precious metals product, which is a combination of gold, silver, and platinum, weighted to their consumption, production, and volume. So you can trade the development that matters most in a changing metals market. You no longer need to pick between gold and silver, which I've often found I pick the wrong metal when I'm looking to go long or short. We've combined all three for holistic precious metals exposure. We will soon have a small global oil product, which blends major crude oil benchmarks from both the US and abroad. So it's going to reduce your geographic bias. Did you know there's a Brent crude oil, not just a WTI? By combining all of them, you actually get more true crude oil exposure. And we have an interest rate product, which is based on the on-the-run 10-year Treasury yield. It's actually quoted in yield. So it's going to cut out some of the complexities of bond conversions and pricing. So you can actually trade what you know and what you hear about, whether it's your car loan, your mortgage, or your student loan. We live in this world of yield, but we're often forced to trade in the world of price when we go to the interest rate futures markets. So for the first time, we can actually trade yield here without DV01 conversions and convexity, et cetera. So with a simple construction, we want you to make one turn, one right turn instead of 3 lefts, navigating through contract specs and large notional sizes, etc. So in conclusion, these are the pillars of the small exchange here: small, standard, and simple. We're creating products that afford an efficient use of capital that can be tailored to any account size. We've created a product with universal construction that actually tracks what you want to trade and provides simple context so you can accelerate your ideas to execution, whether that's in the oil market or the stock market. So really, who are these small exchange products for? Well, we think that they could be a great fit for new traders looking to try affordable products. You get the great benefits of span margining when you trade futures. You don't have to put up 50 to 100% of your capital. But we also think these products could resonate with existing traders looking to scale trade ideas. You know, the future is small, honestly. If you want to take a position and scale in and out of that position, it's much easier to do so with smaller products. You can be more nimble and flexible in your entry and exit points. And really everyone in between. And how can these products be used? Smalls can be used to speculate on short-term action. If you have an opinion on precious metals or interest rates, the great benefit of futures is you can as easily go long or short. There's no Reg T or borrowing constraints that you see in the stock and ETF world. You can also invest in long-term direction. With a yearly rebalance in our equity product, for example, you'll be constantly exposed to the most relevant stocks that are trading today. And finally, you can be used to hedge an existing portfolio of any size or asset class, whether that is a stock portfolio that you'd like to hedge with interest rate exposure or an existing gold exposure that you'd like to hedge with a combination of gold, silver, and platinum. So let's look at how to speculate potentially with the small exchange. Let's say you have an opinion on the US dollar. This is the SFX product here. You can very easily scale in and out of a position just with the ease of the futures contracts. And I'll let you guys know from the liquidity front, we're seeing a very normal profile in each of these products. I encourage you to view the prices and the order books on all these three smalls trading right now through EdgeClear, and you'll see that there could be some great opportunity just on the scalping front in each of these markets. Finally, you can invest, or secondly, you can invest in the smalls as a long-term stock investment. Here's just a depiction of kind of a normal stock, and you can see how something like the small stock 75, which is representative or more representative of the economy with 75 names from 5 sectors, that could be a nice replacement, especially when you consider the capital requirements of futures versus stocks. And finally, we talk about hedging exposure with the small stock, or with the smalls in general. And I kind of mentioned this previously, but if you have a long gold position, you may consider supplementing that with something like the small precious metals. And the same can be used with the SFX or the SM75, which really offer unique diversification compared to what you may already be trading. Now, EdgeClear did mention a fantastic deal for trading through them from now until July 15th, and I'd also like to bring to your attention something coming from the exchange. We've launched something called a subscription offer, which is a one-time payment to the small exchange, and it's going to entitle you to reduced transaction fees for your whole lifetime as a trader. This is something to check out. You can go to the website, which I can bring up here in a moment, and there are more details there, but I encourage you to look into this offer, and we'll be working with Morad and EdgeClear and the whole team to make a tranche of these available to you guys for attending this webinar and checking us out. So with that being said, that wraps up my initial presentation here. I think we'd like to open the floor to any questions that have come in during this presentation, and we'll be happy to discuss.
Okay, Max, do you want to go over the questions? We have a bunch here.
Yeah, we got a bunch of questions.
Red flags.
For everyone. I'm just going to fire them away. Up here. Why, in your opinion, why the SN75 versus something most understand and can chart like the S&P 500? Why choose the SN75?
Sure, that's a great question. And as we created a futures exchange, we had the flexibility to build these products from scratch. And we looked at a lot of these indexes that have existed for honestly decades. You look at the Dow and the S&P 500, they've been around for so long, and they are great barometers of economic health and the market as a whole. But really, you look at some of the top few names in the S&P 500, and they comprise such a significant portion of the index that when you're trading the S&P 500, you're hardly getting exposure to 500 companies. I think most of the concentration is just in a few names. The great benefit of the small stock 75 is, one, it has a historical correlation to the S&P 500 of about 0.93, and that is a historical number. It'll change going forward, but it also has a unique rebalancing aspect. So you're always trading kind of what's relevant in the market and not what's just rallied upward in the last year or 2 years and now comprises 5% of an equity index. But that being said, the correlation between small stock 75 and the S&P 500 creates a really unique opportunity for traders. One thing we've seen over the last few weeks, and really the small stock 75 moves more closely to the Russell historically than to the S&P 500, but there's a great pairs trading opportunity by spreading small stock 75 versus things like the Russell and the S&P 500. So it's a nice supplement and complement to someone who already has exposure to a traditional index product.
Thanks. And then, kind of a good question to follow that up is, is there any way to get some information or where to find out what the 75 stocks are that consist of the SM75?
There is, yes. So are you guys still able to see my screen here?
Yes.
Yes.
Awesome. So here is the small exchange website here. We work with an independent third-party service called Indexit, If you go to the website here, there's a components and weights document. All of these prices are transparent. You can see the exact weightings on all 3 of the products. So the 75 names are stipulated there. And you'll see familiar names that you're used to hearing about in trading, but also some cute names you may not have traded before, but are very relevant in the economy today and tend to have a nice volatility.
Awesome.
Also, to follow up with Mike, you can also access that right from our website. Mike, if you go to that products link and then click on the SM75, it'll be right at the bottom of the page for you.
Perfect.
Awesome. Awesome. That helps a ton. There it is.
These are some of the names comprising the index, and it is 5 major sectors here. So we have information technology, industrials, energies, financials, and materials.
Cool, cool. And how much, is there historical data available for back testing? And if so, how much historical data is available?
That's a great question. So there is historical data for the indexes. So these are all index-based futures, all cash settled. The historical index data, I believe, goes back 3 years. You should be able to see it through the Rhythmic platform if you guys are trading there. Because we are a new exchange, we just launched last Monday, there are only a few trading days worth of historical futures data. But I think the indexes are a great reference if you want to see how the futures move and gain an indication there.
Cool, cool. And then, this is a question I think a lot of people have is, what date will your oil product and the 10-year or in the treasury product be open to trade? Any idea?
Yeah, that is a great question. Those are coming soon. We're not putting a fixed date on it yet, but they're very close. So I would stay tuned there. I know there's been a lot of asks here for an oil product. It's kind of a blank in the market right now. It will be coming out soon, so please stay tuned, and we'll be sure to keep all of you updated as we move forward with those 2 products. And there are also, I wanted to highlight as well that these are just kind of the initial 5 products that we're going live with. We're trying to cover the most popular asset classes, but there are more products in the works as well. So when you look into something like the subscription offer, it's worth considering that the reduction in fees will cover new products going forward. So just something to consider. It's almost like a Netflix subscription, right? When you buy a Netflix subscription, you're also kind of entitled to any of the future content that they produce on their network. So something to think of.
Thanks for that. And then something I've also been kind of curious about is, what was the decision, or why did you guys decide to limit the trading hours between 7 to 4? Or I think is it 7 to 4 or 7:30 to 4:30?
So the trading hours here, I'm in Chicago. We are in the West Loop of Chicago. We are 7 a.m. to 4 p.m. Central Time, trying to be standard here with the initial hours. As liquidity builds in the products, and we're already seeing more participants and market makers and liquidity providers come on board, we'd love to extend those trading hours. I think right now there's a real need for it. We see people, and myself included, trading mobily basically any time of the day. It's something we're moving forward to, just trying to keep it simple for everyone initially here at launch. So stay tuned for some more opening hours.
And I think we, may have asked this question, somewhat of a question previously, but why trade the small exchange, the smalls, over the micros, in your opinion?
Sure. So I like to say it's not a one or the other. They're both great offerings, and I think they can be used together in a lot of unique ways. When you look at our initial 3 products, the small stock 75, the small precious metals, and the small dollar, they're going to move fairly similarly to what you may be trading either on the future side with kind of the micro gold or the micro ES, but also on the stock and ETF side if you're trading products like GLD or UUP or FXJ. So I think used together with those products, we've looked at some historical correlations and also some pairs trading ratios, there's a great spread trade between buying micro ES and selling small stock 75, for example. But also, there are the great benefits of the simplicity and product construction with all the smallest products. I still, to this day, have to reference CME contract specs just to be sure before I enter a position. I don't want to be trading ES thinking it's $10 a tick when it's actually $50 a tick, for example, or $5 for the micros. So I think the ease in traversing across markets and gaining exposure in a variety of asset classes is so much easier with small exchange products that it accelerates your idea to execution, and you can compute your P&Ls in just a blink of an eye. I think there are a number of benefits, but really these should be complementary to what you're currently trading through EdgeClear.
Perfect, thanks for that. And this is kind of a two-part question. Is there, I haven't been to your website today. Is there any way to see, contract specs in terms of, the daily volume through the website, or, anywhere on the small exchange website? And do you have any comments with the, liquidity the past couple weeks or past week and a half, since you guys launched, and your thoughts on what it's going to be like moving forward?
Great, that's an excellent question. You can see all of the contract specifications on the smallexchange.com. If you just go to the products page on the top right here, you'll be directed to this site, and you can click on each of the products. Right here today, we're looking at a front month small stock 75 future. We have values like the last open, high, low, close change. Additionally, the volume and open interest, and just some rough charts for individuals to gain an idea of where we are in the market. You can see we're probably middling in the range here in the small stock 75. There are also some nice comparisons on the relative to existing futures and ETFs, along with all the contract specs, which hopefully you won't have to consistently reference each time you're considering placing a trade. A $100 multiplier for each of the contracts. A 1-cent tick is really $1. Trading hours are very straightforward and uniform to what you may be familiar with. And even our, from the small exchange side, the initial and maintenance margins, which will vary slightly depending on the broker. So all of this is available on the website. Right now we are in the infant stages, I would say, right? We launched last Monday, so we're 7 trading days into the session, and we're already seeing encouraging volumes in each of the products. Today, we've traded front month equities. I've traded 703 contracts. We've seen a steady increase in volume numbers over the past few days. And also, encouragingly, we're seeing a lot of open interest. So people taking positions and holding them overnight, which is really encouraging as a new exchange. When it comes to the liquidity profile of all of the products, we have a number of liquidity providers on board supporting the exchange. There are several market makers quoting. If you notice, you may see some widening and then some tightening of the spreads throughout the day. For us and for traders, that can be viewed as a fantastic opportunity as these spreads widen and tighten. I just had my team run some modeling on what the average quotes were in some of the products over the past few days. And we were looking at about 4 to 5 ticks, so $4 to $5 in the small stock 75, which, considering we're 7 days in, we're pretty excited about that. And as more participants enter the market, as you guys take a look and maybe dabble in a small stock 75 or a small precious metals, we'll just continue to see that ecosystem form and the volume and open interest numbers grow with it. So we're excited. We're encouraged by what we've seen already, and we hope you guys can go in and check things out. And what we like to say is taste the ice cream, right? Take a sample spoon and see if you like the trading style and how things are moving and how they can supplement and complement your existing exposure. So we should see everything improve here in the next few days.
Max, anything that hasn't been answered? Max?
Sorry, I think I was muted right there. I got a couple more. Since this is the first month, it's, we haven't actually gone through an expiration yet, and you mentioned that contracts expire on you said every month on the third Friday, correct?
The third Friday, that's correct.
Cool. Now, have you had any ideas on, for a long-term swing position, how those rollovers will, be done, and how simple, I guess, would it be to roll a position over to the next contract month?
Great, it's an excellent question. It should be very straightforward from our side. So if you notice here, there are 2 contract months outstanding at any time. Currently, there is a June and there's also a July trading. So when it comes to that third Friday of the month, it should be as seamless as just selling this front month, June, and opening a position in July. And it should be basically as straightforward as that. With dollar-wide ticks, there won't be much spread or chasm to cross on that front. And actually, calendar spreads are natively supported from the exchange. So for individuals looking to trade calendars on a daily basis, that's available to them and should make roll facilitation that much easier. It's one of the great reasons we think these products could resonate for passive long-term holders as well. For people who want that cost-effective exposure to metals or foreign exchange or equities, they can maintain duration practically seamlessly here.
Perfect. We got a bunch of questions, so I'm just going to kind of go as quickly as possible to get through as much as we can in the allocated time. What type of data fees should a trader expect, monthly data fees, that is, for the small exchange?
Guys, I have great news for you. There are no data fees for small exchange products for at least the first. So you may be familiar with the headaches and the lure of paying exchange data fees, whether that's ICE or CME. We want you guys to be able to see these products and give them a try. So for the first year, there will be no fees charged by the exchange for market data.
Any idea if or what those fees would be after the first year, or is it you guys still looking into that?
Yeah, it's a great question. I mean, you look at the public filings of some of the existing exchanges, and oftentimes market data is a significant portion of revenue. That's not the approach we plan to take. We want a fair and level playing field with equal access afforded to all participants. And when and if market data fees do come into effect, they will be very nominal. It's not something we want to deter people from. You look at some other exchanges, you get 14 days for free and then it's taken away. We don't want to be that guy. So we're hoping to widen access as best we can.
Mm-hmm. And if someone decides to go with the membership route that you mentioned, which we do have some questions, if you could put that back on the screen real quick. If someone decides to go with your subscription, would they be classified as a professional with other exchanges?
Sure, I'll let Natalie handle this one.
I'm sorry, can you repeat that one more time?
Yeah, if someone decides to go with this lifetime subscription to this small exchange, would they be classified as a professional trader with other exchanges?
Sure. So great question. No, we don't believe that you will be, and that's purposely why we call this a subscription as opposed to a membership. So these individuals, you're just getting a discount on your exchange transaction fees with us, and you're not actually going to be a member of the exchange. You'll just be a subscriber.
Perfect. Thank you for that. Let's see. I'm gonna try to find a few more. Do these also not fall under the pattern day trader rule like other futures products?
That's correct. These are futures contracts. So individuals are afforded the benefits of futures contracts. So you get the capital efficiency, the no pattern day trading rule, which is a huge benefit for a lot of participants. You have a slightly more favorable tax treatment when compared to stocks and ETFs. Futures are taxed at a blended rate of 60-40%, but please consult your tax professional and don't take everything I say exactly right. I'm not a CPA. But then there's also no pattern day trading, no short sale restrictions, ease of buying and selling, great diversification with futures. Really, the benefits are huge with futures. So yeah, should be good there.
Perfect. Let's see. We're getting to.
There are many more
There
questions.
are many more questions.
So let me grab some of these just to clear
go
up.
for it.
Yes, this is recorded. You'll get the recording as we announced at the beginning. The question was also whether or not ETFs, you had compared them to ETFs, and ETFs are managed by advisors and subsequently charge a fee which reduces return on dollars invested. Do the smalls have a similar construction in terms of management fees or some sort of fees if you hold them long term?
No management fee on the futures products. I think with ETFs, it's an interesting space, right? And mutual funds as well. They each charge either a front load or an end load or some management fee. There's none of that with futures contracts, but you should be cognizant of this roll cost. So at the end of the month, when a front month expires and you want to maintain duration and trade a second month as well, there could be a slight difference in price, and that's really the only cost that I can think of.
Okay. The next, an interesting question here, I'll try to keep my opinion to myself at first, but someone's asking, what is the difference between a CFD and what the small exchange offers?
Sure. So a CFD is basically a bet on a spread, whether it'll tighten or widen. The small exchange futures are futures contracts classified as such from a regulatory front. An underlying index, which is representative of what we stipulated is, a small stock 75, for example, is based on an index of 75 stocks. So you're trading a composition of those weights times the share prices. There is a bit of a time component with the futures where the front month, for example, will converge to that underlying index price at expiration. Morad, if you want to chime in with your opinion, feel free to go ahead here.
So I'm an heavy equity guy that moved to futures, traded a lot of volume scalping, was basically a market maker. And we don't have CFDs in the United States. They exist in Europe and so on. They're not permitted here in the US. But in general, from what I know, and anybody who knows can correct me, the CFDs are really something that's produced by that broker dealer or whatever. And so they're kind of like Forex, spot Forex, where it's not a centralized product. And I find those products to be highly suspect in that my preference is to build a career around a product that is matched by an exchange that has a neutral position on whether you need to be short or long. The exchange itself is not betting against me. It's not holding my positions or seeing my trades or anything like that. Of course, it gets the data, but it's just like eBay, a central space for buyers and sellers to come and connect, which to me is a much purer product than, say, Forex, where you're up against an FDM or you're trading against your broker. And CFDs are kind of the same, where they're created by various entities and there is no central marketplace, which is really what attracted me to futures. So in addition to what you said, where CFDs, you're betting on the spread, the futures are much more robust, in my opinion. Again, they're not suitable for all investors, but you're trading your opinion against a planet of other opinions versus you're trading your opinion against a dealer. And that, I think, is a big piece if you intend to do this as a career professional, which we always, that's the direction we want to push EdgeClear's members and my followers too. So I feel like it's much more prudent and long term for traders to trade on a centrally processed or centrally matched entity versus trading against a dealer or a creator of a specific product. That's just my opinion for those who are interested in that. Another question, can I trade these from the UK?
Sure. So as long as you have an account with the futures broker who is offering our products, you can trade them. And you can see a list of those brokers if you go right to our website. Thank you. And then just go, yep, perfect.
So under the member subheading or toolbar, you can click here for a full list of firms offering our products.
Thank you, Mike.
The only one that matters there is EdgeClear, as you can see.
The most important.
Okay, next, will the index composition be available or made available on your website via or through your website via API or a downloadable CSV? This makes it more automatic to consume or versus a PDF. In other words, if somebody wants to parse through and recreate the index and so on, can they get that information directly from you, or is it only available in like a PDF format?
Right now, it's only available in the PDF format, but thank you for that feedback, and we'll look into providing it in other ways.
Okay. And then let me see what else we have missed here. 1 second, there's a ton in here. What is the expected daily volume on the 75s?
So we're averaging over these last 7 days here, and mind you, that is a very small sample set, but we're averaging around 1,500 contracts a day in the small stock 75. That is the front month contract.
Okay. Yeah, I mean, it's still nascent. It's a brand new product, so it'll take a little bit of time to pick up. How many levels of depth can your feed, going to whoever the data feed provider, how many levels of depth can you provide through your system?
I believe Rhythmic is supporting level 3, but there are numerous other extranet providers we work with who can provide that level 3 if that's something you're interested in.
Okay.
There should. I'm sorry to interrupt. It's Pete Mullen. There should be 10 levels on each side.
There should be 10 levels on each side. Okay, so it's not like a full depth like MBO where you could just scroll and scroll and scroll at this point. Okay, and that's technology based. I mean, as demand increases, as the volume's there, it makes sense to start investing in that infrastructure, is my guess. On CQG, the small exchange products are listed as a stock. Why is that? Any idea?
It's an interesting question. I know CQG is supporting all the symbology. They should be posting both the spot indexes along with the futures. These are not stocks. These are futures contracts. So that's a great point. Thanks for bringing that up.
Okay. For the interest yield product, so unlike the bonds, the interest rate product will have yields up equals price up and vice versa. Is that how it trades? And when I first heard about this from Donnie, that it's a yield product versus like a note or something like that, I thought, man, it's like an American driving in England, you know, like you have to kind of reverse your thinking a little bit. So if the yield is up, does the price go up? Is that how this works?
That's correct. Yeah, so it's kind of like fighting back years of a bad habit of converting yields and prices and that inverse relationship. We figure so many people hear about interest rates and they don't hear about bond prices. It's not like you're watching CNBC or you go to the bank and they quote you a bond price of 176.28. You know, they're quoting you a yield. So by providing a product that's actually quoted in what you're familiar with, we're trying to remove that headache, and it actually simplifies a lot of factors. You think about curve trades. If you want to trade a 2s 10s steepener, you know, you have to first of all do the inverse, but then also do the DV01 conversion. So with an on-the-run 10-year Treasury product that's quoted in yield, down the road, maybe we launch a 30-year interest rate product. It'll be a seamless pairs trade between the two with no with no obtuse ratioing of each legs. So in this case, if you think yields are going higher, you simply buy the product. If you think yields are going lower, you simply sell the product.
But it's fun to figure out what the coupon is on your particular treasury and then figure out what the cheapest to deliver is, and then compute the yield coming out of that to figure out where the heck your position stands on the curve. I mean,
You are,
taking out a lot of the you're taking out a lot of the fun there of having to. It's like trying to convert empirical to metric instead of just using straight metric, right? I'm just being facetious. Somebody would like you to visit the fee structure again, if you can just show that again and explain how the fee structure works. And of course, that's impacted by whether or not a subscription is owned by the particular user. And you might want to talk just a minute about, once you have that subscription, that there is this token process that they need to kind of activate in order to get the lower pricing.
That's correct. So if you go to the Small Exchange website under Market Info on this toolbar here, you can scroll down to see our fee structure. And if you've spent any time looking into other exchanges, you'll realize that this is surprisingly short and simple. I've read some other exchanges that are 17 pages long and require a whole legal team to decode. Our exchange fees are very straightforward. So from the exchange side, we will charge 15 cents per contract. That is per contract execution. That can be reduced to 7 cents with a one-time $100 payment for the subscription offer. If you do follow through with the subscriber, there's a section on the website to just click the subscribe button. It'll walk you through a portal. It's very straightforward for individuals, and you'll be awarded a token. Natalie, please jump in here if I'm deviating off course a bit from the structure. But basically, that token will then be applied to all of your executions. So you will have to call up your broker and say, hey, I have a small exchange subscription. Here's my token. And then EdgeClear can apply that to your account so you receive the reduced billing rate.
Yep, no, you're spot on, Mike.
Okay. And as it says there, the data fees are waived for 2 years. Another question, someone's asking, when will these products be available at IB? I don't know anything about what IB is doing, but is there an answer to that?
It's a great question. They actually should already be available through, I'm assuming IB is Interactive Brokers here.
Yes. Yep. Or just come to EdgeClear, we'll take care of it.
Yeah, it sounds like you guys have a great offer, Morad. I would consider EdgeClear.
Thanks. Big endorsement. So I have a question for myself. Rollover on the U.S. indices is this Thursday, and expiration is the third Friday of the month, as it is on the small exchange. What will the rollover look like, and what will we roll to? Do we roll the day of expiration, or what do you expect in terms of product volume transitioning? And there's a question about volume here, which we'll address next.
Hey, it's Pete again, guys. Mike, I'm going to jump in real quick. So with the cash settled index, I think we're going to see, and monthly expirations, as the small indexes have, we'll probably see that roll stay relatively tight, which is nice. So when I mean tight, it'll be compressed in terms of time. I imagine it will go a little bit closer to expiration, and we'll probably see, again, our products expire on the third Friday of the month at 3 o'clock. We'll probably see the bulk of that roll happen Tuesday afternoon and Wednesday morning in a very compressed fashion, much in the way that you see ES or NQ roll on that Thursday night, Friday morning.
Excellent. Pete, while we have you on, why go monthly? Just to go over that a minute, why did you go monthly as opposed to the traditional quarterly? I mean, you're not doing anything traditional here, as we recognize that, but why go the way of monthly versus quarterly?
Right. And you know what? Monthly actually affords, I think it affords a little bit cleaner relationship to the cash. And also, one of our big focuses as we launch new products, and Mike has highlighted wonderfully here, is to put options on futures on top of them. Having monthly expiration allows us to overlay very easily concurrent monthly expirations that will exercise and collapse into that cash settlement. So we'll have, for lack of a better phrase, a very elegant suite of products that all cash settle at the same time on the same day.
Okay. Someone's asking.
I got a question here. Is does the small exchange, have they set any percent limits for percent limits up and down on the markets in one day?
Yes. Yes. So we have, in all of our products, we've got 3 limits, a 7, a 13, and a 20%. Now the 7 and 13 are intraday limits, and what they are pauses in the marketplace. So if the market in any of our products goes up or down to the 7% level, it will pause for 3 minutes. It goes through a pre-opening auction and then reestablishes trade in the market. So it gives the market time to reassess after a dramatic move while not inhibiting trading for the balance of the day. When the market reaches 13%, the same 3-minute process of a pause and a reopening takes place for the market to gain a little bit of semblance. And then at 20%, that's our traditional, what you guys who have traded futures know is the hard limit or the daily limit. There is no trade outside of up or down 20% on any given day.
And so you would have to wait for the next session to get out of your position or to trade further, right?
You would. Now, the market, if the market was up 20%, the market doesn't close. It will remain open. And if some event happened to have the market trade lower, sellers could come in and hit those bids and the market would continue to trade, but the market can't trade higher. It could close in a limit up position. If there are bids resting at that last price increment, it can trade at 20%, the market would close limit up.
Right. Okay, so we're out of time here, and we just want to wrap up. And the question, the recurring question, which you would guess would be, is one, who are the market makers? Do you have any big names kind of making markets in there? And then I'll let you kind of answer this in conjunction. The volume is very low. The liquidity is very low. I watch these markets on a heat map every day. I believe I can frankly say that the spread really is about 3 ticks wide, maybe 2 to 3 ticks wide most of the time. The liquidity is anywhere between 1 lots and 5 lots on the inside of the market, and then a little bit higher on the outside. So who are the market makers, and how does an exchange kind of work out a way to get more liquidity in the market so that it's a little bit easier to read what the true intent of the product is in the auction?
Right. Well, and we have some of the largest liquidity providers. So both Jump and Citadel are our primary market makers, also investors in the exchange. Now they don't receive any specific preferential treatment. And as you mentioned, futures are wonderful with that central limit order book, the most level and fair playing field we have to trade product. So they are like everyone else, as you mentioned, with the new product with 6 days of history, now 7 days of history behind it. They're getting their bearings in the marketplace, and we're seeing that bid offer spread tighten up, the size of the quote tighten up, and as we onboard new market makers, which we're in the process of doing, we'll see that grow. So as firms like yours and other firms onboard, that will bring more business, which will, and Max Moore, and I know you guys have both made markets, and you know that once somebody quotes something, there's that interest of quoting on one tick either side just to get some interest. And we're starting to see that now where the market makers are starting to compete with one another. So I expect that we're going to see that size and depth of the book keep growing as it has the last 7 trading days, and get to that, what we like to call a normal liquidity profile.
Very, very cool. Okay, well, we want to thank you all for taking the time, both everybody who's attended. There were a lot of questions in here. We really appreciate that. The more questions, the better. And we just want to remind everyone to take a look at this deal at EdgeClear. It will not be going for very long. And all you have to do is just go to edgeclear.com and either leave a message in the chat widget or go to the Contact Us page and let us know you're interested. The deal is 98 cents per turn, all in fees, including exchange fees on Rhythmic, which is usually, it has its own transaction fee. We're including that in there. In addition to that, we're providing you with a rebate of 10 cents per side. So effectively, you're trading this at 78 cents per round turn, all in, no questions asked. There are minimums. You have to meet the margin requirements and things like that. But this is why we're fans of the small exchange, in that you don't have to park, $20,000, $30,000 to trade these products. I want to remind you that lower margins automatically have inherently increase your risk, but these products are designed to be small, and you don't have to have that much equity in an account to open it. Of course, opening an account with us provides you access to a variety of futures markets and trading platforms and services designed for the individual independent online trader. We encourage you to take advantage of this offer. Once again, I just want to thank Pete, Michael, and Natalie for coming on and taking a portion of their afternoon as an exchange to discuss their products. We are super excited. I'm very, very excited about this taking off. I'm really excited to trade it. And I'm also very excited to finally get a micro crude or a small crude product. We're looking forward to that. Hopefully, as the liquidity and the volume comes in, it becomes easier and more quick for the folks at the small exchange to introduce more and more products to give us the diversity that we need as traders. Thanks everyone for attending, and thanks team for coming on and presenting to us.
Thank you, guys.
Thanks, everybody.
Take care. Cheers.